Welcome to Let's Talk Investing, a co-production of the Globe and Mail and the Investor Education Fund. I'm Rob Carrick, personal finance columnist at the Globe and Mail, and with me is Gordon Pape. Gordon is a well-known investing author. Gordon and I are going to talk about choosing between mutual funds and ETFs for retail investors in their portfolios. Gordon, lay out a scenario, sort of a composite of an investor for whom ETFs would be just an ideal choice.
Someone who has a trading account, for example, at a discount brokerage firm, and is able to acquire them very cheaply, is willing to put up an ETF portfolio which they're going to buy and hold. I don't believe you should be trading out of these things very often. That would be the ideal kind of person for someone like that.
Okay, now mutual funds. I mean, there's about $500 billion invested in mutual funds. Obviously, they're a very fine way to invest. You've been writing about them for decades. Mm-hmm. In which case do you think someone will be better served with a mutual fund portfolio?
This might be, for example, a small investor, somebody who's just starting out and doesn't have a lot of money to put aside. Maybe a few $100s. You can get into mutual funds, some as low as $100. With an RSP, sometimes you can get in with just $25 a month into these things. Certainly most of them you can get into for at least $500. And you buy no-load mutual funds on that basis, no cost going in and out, and they're very attractive that way. Also, if you're into something like an automatic investment plan, say with an RSP, mutual funds are very convenient for doing that.
Okay, now, one of the things about ETFs is in that they're sold through a brokerage account. It's very easy to buy and sell them. And there was a study done recently that found that investors tended to trade ETFs too much. It's easy to trade, and so they did trade. They tried to lock in gains. They tried to time the market, and what ended up happening was they weren't making as much money as the indexes they were investing in. They were sort of selling too soon, buying too low, too high, whatever, making the wrong moves. Talk to me about what your trading attitude has to be when you own ETFs.
Well, I think basically they're a buy and hold investment. Essentially, you're buying the index, and you've hit the nail right on the head there. Nobody has successfully managed market timing. Even the pros cannot get market timing right all the time. And so for an amateur to go in and say, okay, I'm going to buy the TSX now and then I'm going to sell it when it gets to its peak and sit in the sidelines for a while, the odds against doing that certainly consistently are very, very low. So essentially I feel that if you're going to go in and create an ETF portfolio, you should say, okay, I'm in for the long haul, because anyone who's ever examined this says that you stay with the portfolio for 5 years or 10 years and you just ride the ups and downs of the market, you're going to do just fine.
Now, mutual funds, it strikes me now, you can sell mutual funds once a day, but they're not like a stock where you can put in an order. Is that maybe a more stable platform for someone who might be tempted to make all kinds of crazy moves in and out?
Well, it certainly can be, and there are certain types of mutual funds, of course, that put a disincentive on selling. For example, if you bought a mutual fund on a deferred sales charge basis, you have a great disincentive to sell because You're going to be hit with a commission. So perhaps you want to sell, but you get yourself locked in, and maybe it's just as well, if it's a good mutual fund, that you stay with it over time.
It sometimes strikes me that ETFs are almost mutual funds for savvier, more experienced investors who realize that 1,000 different products doesn't really help. A few good ones are all you need. Is that a fair viewpoint, do you think?
Yes, I think it is. And essentially, a few is all you need. You don't have to have a whole universe of ETFs in your portfolio any more than you have to have a whole universe of mutual funds.
Okay, last question. And you alluded to this earlier on. You were talking about in some of your model portfolios, you mix and match. Is it a feasible strategy to sort of cherry pick maybe a couple of good mutual funds, and then where ETFs give you the better bang for your buck, you mix those in as well, and you sort of have a combined portfolio?
Yeah, absolutely. And I do encourage people to look very carefully at the possibility of doing that.
Thanks, Gordon.
You're welcome.